please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Some interesting moves. NTPC is on the move now. So there's a sudden spike, days high on that stock. Otherwise, we're still holding about a 1% decline for the Nifty, the Sensex and the mid-cap index. That has been the story so far. And obviously, NBFCs have found some buying at the lows. That's something that continues as well. By the way, talking about stocks that are extremely volatile, Fortis Healthcare can almost always be on that list of late. Again, plenty of selling now. It's off the highs of the day, as you can see on that chart there. But right now, let's focus on what is on Nigel's radar. It is Monday, which means it's time for Cap Mania.
Well, the stock that we're focusing on is Jindal SAW. You know, in the last 1 year, many stocks have done well, but a few stocks have corrected nearly around 30% from the recent peak. And that's why, in fact, that stock did come on my radar. It's had a good run, but from the peak of January, it's seen a bit of a correction. What does the company do? Well, they have various verticals. They are into large diameter pipes, and some of those, pictures are up for you on the screen. It's basically into oil and gas. It also deals with water transportation. They need coils, which are sourced domestically. That's the second part of their business. That's a ductile iron pipes business. Over there, they need iron ore. That's imported, and then, in fact, it's fed into the blast furnace. And also, they have the seamless pipes business. Now, that's used in power and refineries in the bearing segment as well. And finally, the pellets is what they deal with. That, in fact, has seen a big surge in the last 1 year or so. If you're taking a look at the contribution coming in from individual segments, well, in fact, another important point is that all these capacities are running at more than 75%. And in fact, the management is indicating that 15 to around 35% is what the contribution could be from every segment. But in the last 1 year, well, they had a higher contribution coming in from the SAW pipes. That, in fact, is the large diameter pipes. That's the 8 SAW as well as the L SAW. Over there, that was nearly around 40%. That's because they have a high amount of dependability on, in fact, the water segment. So, you know, if you just take a look at the contribution coming in from various industries, well, the water segment is up in there with a high contribution. Exports as well contribute nearly around 25 to around 30% of their total order book as well as their revenues. Now, the big trigger for them really was that they de-subsidized some of those divisions. So some of those divisions were into EPC, water to energy, and railway wagon manufacturing. They got rid of all these divisions, and that is very, very important because otherwise the finance cost used to come in the consolidated entity. Now, the two main reasons is that they de-subsidized that. That's they removed it from the listed entity. One was to focus on the core competency. The second was debt reduction. Now, if you take a look at the total finance cost, the consolidated finance cost was much higher than the standalone. Now, with them de-subsidizing some of these entities, well, both these two will merge or come closer towards each other. And also in the first 9 months, they made a good attempt in reducing the cost because it's come down by around 5%. They've repaid some loans and they've refinanced some loans as well. The debt picture currently is nearly around 4,200 crores. That's including the working capital in their books. And the average borrowing cost has come down below that 10% odd mark. The first 9 months of the year were quite good. Good top line growth we saw. There was some bit of margin flattishness or some kind of compression there at around 12.5%. And the profit number as well looked quite good. That jumped up by nearly around 14%. There's a good order book over there. Strong order book visibility going ahead of more than $1 billion. So that's important. And the key issues to track will be, you know, if they're going to be transporting water, if they're going to be into waste, water sewage as well. Well, government spending is going to be very important. Second factor is stability in oil prices, because if they're going to be dealing with the oil and gas space as well, then that's rather important. And also implementation of GST. That impacted margins in the last few quarters. Now, quarter 4 and going ahead, we'll have to see what happens out there. And their pellet plant, remember, it's located on the west. All the other pellet makers we talk about are on the east. So their geographic, location is something that helps them with the spike in pellet prices. And also they have their captive iron ore mines. If you take a look at the shareholding pattern, well, the promoters hold roughly around 53% and a couple of large funds as well in there. Interesting stock, corrected a goodish bit from the recent high. Let's see what happens going ahead.
Okay, Nigel, thanks a lot for that. That's Midcap Mania, of course, standard disclaimer, not a stock recommendation, just some interesting research that Nigel does every week. Let's get an insight into dealing room chatter then. Nimesh Shah is here with Trader Talk. Nimesh, quite a bit of recovery on the banks, but overall the market is still down.
Oh yes, Anuj. So tough day for the bulls, and that looks like it's going to be a tough tough week, so to speak, because technically the markets are in the selling mode now. So every rally is getting sold into. No specific reason why the bank stocks are up today, but that essentially been the case. Selective IT, pharma banks have done well, but largely the focus is on the sell side from the FIs. So I'll be watching out for the FI data very closely. Very strong rumors of a large basket selling by a very long only fund in morning trade. So whether we need to see whether that reflects in the FI data. But broadly the sense is, we are on the downside. Technically now, the 200 EMA is something to watch out for, which is around 10,120 levels. So that's the next level to watch out. But broadly the sense I'm getting is that every level, there will be selling pressure, and investors are willing to sell into this rally. So that's a clear message from the dealing desk. Even from the retail HNI category, in the mid cap and small cap, the sense I'm getting is now there is a bit of panic, and people are willing to sell into their profit holding. So directionally, it looks like we are heading towards on the south. Further selling is likely to accentuate. But broadly, the sense is maybe the next level to watch will be the 200 DMA. But within that, I guess selective outperformance in IT and pharma may just continue, at least in the near term.
All right. Thanks, Nimesh, very much for that. So that's the mood across dealing rooms this Monday afternoon. Let's also welcome in Neeraj Diwan joining us in the conversation. He's from Quantum Securities. Neeraj, as I speak with you, some of these IT stocks are back to the highs of the day. Good moves, actually. Let's pull up the intradays. Tech Mahindra, TCS itself, days high on these stocks. We're just having a discussion with Edelweiss. They are quite sold on some of these large cap names. What would you pick in IT now, Neeraj?
Yeah, good afternoon. Like I have mentioned in the last interaction also we had, I'm more positive on the mid-cap IT space. Stocks like, you saw Persistent Systems, you've seen Mindtree. Mindtree, I think, touched a high today also, 50-week high. I think these stocks, the results that came also very encouraging last couple of quarters. They've been showing considerable improvement, and it is really easy for a mid-cap IT or a company of that size to adapt itself to changing environment, changing geographies, which gets a little difficult for very large companies. So I think that is why we're seeing a performance improvement in mid-cap IT, which is much more than the large-cap IT. I think which may continue, though I'm positive on mid-cap IT, though I'm neutral on the large-cap IT space. Okay,
interesting. Ashwani, you said after a long time you're tempted to take Bank Nifty longs home. What kind of rally would you expect from here then?
No big rally, but one test of 24,950, 25,000 on the Nifty, maybe 10,450 thereabouts. What's happened in Europe is that things are into the green. There was a huge trade war looming. That generally does not gel too well, and the US futures have come back from the lows. So that way, if there's a bit of a recovery overnight, you could open higher. So that's the kind of rally you should be expecting. I don't think you're likely to get major rallies from here, but a serious enough bounce back which will allow you to get back into shorts again.
Okay, that's interesting. Neeraj, good afternoon. Your thoughts on Tata Motors? That's now down 5%.
Yeah, good afternoon. I think Tata Motors, the results were not good. Figures have not been good. Even the US sales figures which came are not good. I think though there are a lot of negatives around the stock, but I think as far as the price movement is concerned, I think the stock has corrected enough, and I don't see too much downside from these levels. Though it will take a lot of effort or some good news to come for the stock to move. So if someone is holding on to the stock, I will hold on to it. But it won't really move that fast. So one needs to have some patience, because domestic business is definitely improving for them. So that is what was really bothering them earlier. But now domestic is doing well. If once globally also starts contributing, I think Tata Motors can have a good rally from these levels. But I think that may take some time.
Okay, I'm just noticing the move on some of these stocks. Mindtree, for instance, 7% bump up. There's a huge buying wave that has swept through all of IT once again. And of course, the other stocks that have been on our radar, Thomas Cook and Cox & Kings. Cox & Kings is actually positive. That stock at one point was down almost 5.5–6%. There were concerns, about the road ahead. Let's pull up Questcorp, actually. Questcorp was the one that was down almost 5–6%, with concerns of what this whole restructuring might mean. Now it's well off the lows of the day. Thomas Cook, of course, continues to be in positive territory. Neeraj, I'm not quite sure if you managed to catch this restructuring news around Thomas Cook and Quess Corp. Thoughts on the same?
No, we don't really track these companies, so don't really have an idea about the restructuring news there.
Okay, no problem. Well, Anuj, I guess we should look at the close down. I mean, how would you qualify this day? Because at least it didn't fall. At the last hour wasn't brutal.
Yeah, I mean, it didn't fall, but today essentially was a day where things have played as per script. On the Bank Nifty, you've taken support at an important level. I mean, 200-day moving averages don't break so easily. It requires a lot of effort, and from there's been quite a bit of buying on the Nifty Bank, but other stocks started to emerge a bit weak. The Nifty is nowhere near the high point, and that's still going home with 100-point losses. It's just that, in the morning, because we thought the weakness was too much, SGX Nifty at one point was below 10,300, for example, on Friday. You would have thought that, things are better than what they could have been. But that's not to say that the market is weak. The recent low is 10,276. Right now we are at 10,355. So in that sense, both for the Nifty and Bank Nifty, now we are closer to the lows of the year than highs of the year. So let's see. But at lower level, of course, there was minor buying. And once again, IT is now the leader of this market. That point, I think, should not be forgotten. That, the way some of the stocks rallied towards the end, especially names like Tech Mahindra, TCS, we're talking to the Edelweiss team, that really is your space to focus on. So these two stocks, of course, ended in the green. But on the way down, Tata Motors, and I think that really is the biggest sort of, hit as far as those Donald Trump tweets are concerned. Yes, the sales number was also weak, but the market is thinking, what would happen to JLR sales in the US if this rhetoric has to translate into something big. So 5% lower on Tata Motors, Hindalco, Tata Steel. Reliance was quite weak today, of course. Vedanta, ONGC, Yes Bank, a lot of stocks down about 2%. HDFC, ITC, a lot of index heavies were down. Larsen and Toubro down quite a bit in trade today.
Yeah, if I talk about the mid caps, I mean, overall, of course, the index is down. So I will start with some of the losers. Basically, all metal names beyond the index were also on the weaker side today. So they're looking at a Nalco, anything else. Take the example of Jindal Stainless, even material stocks. I mean, your graphite, Phillips Carbon, most of these names were on the lower side of the screen today. If there is, one IT stock that didn't participate with the rest, maybe it's L&T Tech. You can pull up that one because it's still looking at a cut of around 4 to 5%. So that was a bit of an outlier in an otherwise buoyant market. Balrampur Chini has had a pretty tough day. That's L&T Infotech. L&T Tech will come up for you. That's down 5%. Balrampur Chini has had a very rough day today, about 8-9% down on that stock. More metal names like Tata Metallics on the lower side of the screen. So, that pressure point continued pretty much for the entire universe out there. What else can we spot on the lower side? There's, of course, Religare and Fortis. I mean, those two twins continue to be volatile. Religare is finally going home with a cut of almost 3.5% or so. But now if we talk about the gainers, IDBI Bank again on the move, again a 52-week high on the stock today, 5% up. Of course, NBFCs and IT, these were two clear trends that stood out today. So on the NBFC side, M&M Financial 2.5%, LIC Housing Finance about 1.5%. Let's just get Manappuram as well for you. And Canfin Homes was very, very volatile throughout the session. Let's take the last rate on Canfin Homes. Yeah, it is positive, about 2% on the upside. Something like Voltas, Crompton Consumer stood out, Blue Star ahead of perhaps the summer season. So some of these stocks have been looking good, not too bad over there. And finally, of course, on BEML, this whole stake sale talk, nothing new, only a reiteration of what we already know. Stock is still going home with gains of almost 10%. And finally, the restructuring stocks, so the corporate newsmakers of the day, Quess Corp and Thomas Cook. Thomas Cook, of course, up about 6%, sounded very optimistic on their non-Quess business in the interaction with us. So that's how it's closing out, about 1% down on the mid-cap index, Anuj.
Okay, let's take some final thoughts from our experts then. Mitesh, for tomorrow, what would be your big trade?
So I think, I haven't, totally given up on the short outlook, so I would still continue to trade with more of short bias. Of course, you would want to see the Bank Nifty break with the 200-day average. If that was to happen, I think, it'll be more aggressive on the short side. Else, we'll maintain the short position which we are already carrying, which is basically something on the Bank Nifty on individual stock specific basis. But I have taken some partially long positions on the IT stocks, namely Hexaware and Mindtree.
Okay, and Ashwini, I mean, now what's the final advice for tomorrow? And maybe a specific word on Reliance, because if there was one clear area of disappointment today, it was probably RIL, right?
See, it's not fallen. Today is the first day it's fallen. Basically 880, 940 type of range. See, tomorrow what can happen is that if you do get some sort of gap up, that would allow, fresh shorts to come in and maybe closer to say 10,450, 460 thereabouts. And on the Bank Nifty, one more test of 24,950, 25,000. Because the bounce from the 200-day moving average, generally, given the speed at which Bank Nifty has come towards it, I think is likely to fail at some point and will go below the 200-day moving average. And if we do get a gap up, that process becomes easier. But overall, still some choppiness in this 24,800, 25,050 kind of zone. Similarly, Nifty, it appears that 10,300, 10,450 could act as an intermediate range.
Okay. Neeraj, finally, your thoughts on some of the large cap pharma names which are in the news. Sun Pharma has ended with some gains today. On the other hand, Aurobindo, I think there's still confusion over how severe these Unit 4 observations are. Your thoughts on these two stocks?
Yeah, I think, the pain that the pharma sector is going through is not getting over. Now, we saw these observations on Aurobindo also. But there was some positive news which came from Sun Pharma, and there were just 3 observations which are left. But I think, you've seen a good 1.5 years of pain and a lot of these FDA issues. But I think now is the time one should start nibbling on some of the large cap pharma names. So, one has to be very selective and have to do it gradually. You can't really take a position and just sit on it. I think one needs to add on the position, like Sun Pharma, for that matter, has seen a good correction. Now seen a bounce back. I think Sun Pharma is one where you can see things improving faster now with all the inspections and everything nearing some sort of completion.
Okay. ArcelorMittal has entered into a joint venture pact with Nippon Steel and Sumitomo Metal Corporation to jointly acquire the assets of Essar Steel. The company's arm, ArcelorMittal India, has submitted a resolution plan for Essar Steel on the 12th of February. Anju Sharma caught up with Brian Rana, the Executive Vice President ArcelorMittal, to get more insights into the bid and the strategy for India.
In terms of getting into India, that we had some significant plans for a greenfield facility back in 2008. But the economy went awfully negative after that. And since then, it's been very difficult to justify the capital cost of doing a greenfield facility in India. So we've been looking for various alternatives, and now we find some assets have come up for sale. So it's an opportunity for us to take advantage of that.
Which are the assets that you have bid for?
We've put in a bid for Essar. It's our main focus in terms of the distressed assets that we've looked at. So we are focused on that one and hoping it will turn out well for us.
ArcelorMittal is known for a turnaround of distressed assets. So how much time do you think you'll take to turn around the Essar Steel's Hazira plant?
I think turning it around is probably one way of putting it, but to take it to its nearer to its nameplate potential is probably a better way to put it. It's been running in a near bankruptcy mode for quite some period of time, so the previous management was constrained in what they could do. We will be free of those constraints and can probably within a year's time show significant progress, and within 2 years much more progress than the current level of performance of the plant.
Okay. So ArcelorMittal is known for world-class facilities. So what are the changes that we can expect if you win the bid for the Essar Steel plant? And if I can also ask you, what equity value do you see in Essar's steel plant? Well,
first of all, the changes that we will make in the plant are something that I'm not at liberty to discuss because it's part of the resolution plan we have submitted. And we are subject to some confidentiality clauses in that process. So hopefully you let me respect those.
Yes.
And then with respect to what we see as value, we are a global company and India is a growing market. So it's one of the markets that's probably going to have the most rapid growth in the next few years. And it's clearly of interest to us to be participating in the growing markets. We are producing 95 million tons of steel in a number of countries around the globe, and this was one place where we didn't have a good production facility already. So it fits into our strategy of being a global player and taking a major role in growing economies where we can.
Moving on to another exclusive, Yash Jain caught up with Tom Lineberger, global CEO of Cummins, on the sidelines of the launch of their technical center in Pune. Yash began by asking him about the company's investment and the readiness as India looks to move to BS6 standards.
Right now, the industry is at a really important junction. We're now moving into world-class emission standards in the truck industry.
Right.
We'll be BS6 in April of 2020.
Right.
And BS6 is the same emissions level the US is in and Europe is in. These are very exacting standards. So we need to make sure we had world-class technical capability in India. To be able to deliver that world-class technology to customers, but also at a cost that people can afford, and also in a way that serves this market.
What kind of investment has Cummins India placed as far as, preparing itself for that BS6 rollout is concerned, and how prepared is Cummins India today for that particular rollout?
We've made a significant investment, and by the way, not just in technical development, also in manufacturing. So we will be manufacturing all the key components, all the key subsystems, the engines, all here in India. So at our Fulton campus nearby, we've invested in manufacturing for engines, of course, but also for after treatment, for fuel systems, for turbochargers, for filtration. So all these key subsystems now we'll make in India.
As far as those BS6 engines are concerned, what's the strategy which you have in place? Have you already started having partnerships with automobile manufacturers? If yes, what is the nature of these partnerships? Who are these manufacturers? And also, if you could throw some light on the product pipeline, what are these models which you have in the pipeline which are ready in the first phase of the rollout? Yeah, so we will, we've just launched BS4 standard engines, which are already electronic engines, already have after treatment system on them. And we are offering them to all of the commercial truck makers. We have a joint venture, of course, with Tata, but we also have customer relationships with all the major truck manufacturers, and so all of them are have been offered both the engines and the key subsystems like the after treatment systems, and that will be, we will continue to do that. So in BS6 the same thing will happen. We are already partnering with all those customers because it takes several years to get these products, even if you have the base technologies ready, to get them ready to be able to make hundreds of thousands of units, everyone perfectly reliable and ready to go for the customer. This takes a lot of testing and development. So we are already actively testing this full range of vehicles. So we will offer products all the way down to 4 liters. Yeah, so for light duty trucks. And then all the way up to heavy duty trucks.
All right, now from Cummins and their India strategy, let's move forward. Located 25 kilometers from the heart of Mumbai, Thane city has remained quite literally in the island city's shadow. So it came as a pleasant surprise when Thane was chosen as a smart city ahead of capitals like Bengaluru, Shimla and Thiruvananthapuram. But 2 years after it made the cut to receive 1,000 crore rupees of government fundraising to transform itself, has Thane gotten any smarter? Well, as part of CNBC TV18 Smart Cities report card, Kevin Lee as well as Ashwini Prilorikar travelled to Thane to see how things are shaping up for themselves.
Home to almost 19 lakh people, Thane is India's 16th most populous city. It's best known for its suburban railway station, which sees over 6 lakh footfalls every day. It's no surprise then that when its citizens were asked what changes they'd like to see to make Thane a smart city, an overwhelming majority voted for the decongestion of the station. So the municipal corporation came up with this solution.
One is new suburban station and second is a multimodal transit hub at existing Thane station. As you have asked about new suburban station, this station will be constructed between Mulund and Thane. It will be just 1.34 kilometers away from Thane. And for this station, we have allocated around 289 crores through Smart City.
The existing station is also due for an overhaul in both looks and systems. The entire exercise will cost 845 crore rupees and is scheduled for completion by the end of 2018. But will it actually happen? Thane station was set up in 1853. It's one of India's oldest railway stations and is long overdue for a makeover, which it will get under the Smart City program. However, in the 2 years since this makeover was announced, only small changes have been implemented at Thane station. There are a few CCTV cameras that have been set up, there are some Wi-Fi hotspots that have been set up, but no big ticket work has started as of yet. As for the new railway station between Thane and Mulund stations, that still remains a pipe dream, because forget about the groundbreaking, even the land has not been procured as of yet. But the municipality claims that land procurement is beyond its control.
The only issue with the government is about the handing over of the space for construction of the new Thane station. Roughly, it requires around 14 to 15 acres of land. This land belongs to Health Department of Government of Maharashtra.
But this does not mean nothing has happened on the ground in other parts of Thane. For instance, the beautification of two of Thane's popular lakes has been completed, with visitors being greeted with LED lights, illuminated fountains and benches. Parts of the city also have free public Wi-Fi, and some public schools have begun installing solar power panels on their roofs. A few public restrooms have also been renovated, and the city has rolled out a mobile application and a DigiCard that citizens can use to avail discounts on various government services. The development, however, is a little one-sided. I'm standing in Kisan Nagar. This is a 70-acre area full of narrow lanes, dilapidated buildings and a lot of small shops. Now Kisan Nagar is all set to get a 4,000 crore rupee makeover under the Smart City program, and while the municipality is confident of making this happen by 2020, the citizens are not.
बोल रहे हैं अभी 4-5 साल हो गए बोल के, कभी बनेगा कोई आइडिया नहीं उसका।
एक्चुअली ये एरिया में पूरा सब इनलीगल बिल्डिंग है, अनधिकृत बांधकाम। वो होने का देख है कि इधर के पब्लिक का ये फायदा होगा कि सब लीगली हो जाएंगे।
मैं इधर 92 से यहाँ रहता हूँ। ये बिल्डिंग क्लस्टर प्लान का जो आया है, ये कब तक होगा, ये मेरे को जानना है।
With the government cracking the whip in the lead up to the 2019 elections, the municipality is confident that things will be dramatically different a year from now. But the harsh reality is that while several smaller exercises are being carried out, the big ticket renovations are still in the planning stage. So far, out of 30 proposed projects, work on 3 projects worth 2.2 crore rupees has been completed. On 19 other projects worth 830 crore rupees, work has either just started or is awaiting expressions of interest. That leaves projects worth 4,650 crore rupees that are still just blueprints. In Thane, with Ashwini Priolkar, Kevin Lee.
Okay, that's how Thane is shaping up as a smart city. Meanwhile, flashes on your screen indicating that the plot is thickening as far as Essar Steel's debt resolution is concerned. It seems the meeting of the Committee of Creditors has been pushed back. It was supposed to happen today. What else is going on? Let's ask the lady who has the news. Ritu is with us in the studios. Ritu, this is very, very interesting because you have a couple of global giants and you have existing promoters who've tied up with the Russians. So it's almost like a, an international pot boiler. What's the latest?
So, Ruby, it's close to a month almost since the bids were submitted for Essar Steel. We're talking about 12th of February when ArcelorMittal had submitted a bid in its own capacity, and also there was New Metal, which is VTB, and Revant Roya, who's the son of the promoters of Essar family, who had submitted bids to acquire majority stake in Essar. But as it turns out, a lot of developments have happened since then. There's a lot of debate about the eligibility of both the bids. One, ArcelorMittal, because of its stake in Uttam Galma, which it exited, and now it has also announced that to strengthen the bid, it'll look to tie up with Nippon Steel in China, perhaps to strengthen its case there. On the other hand, we also, read about the VTB head today saying that they're okay with dropping Revant Roya out of the consortium if that is what it takes to win back Essar Steel. So clearly, both of the players are strengthening their, cases to make their bids for Essar Steel. But the IRP that was supposed to have called for a meeting today of the lenders has deferred that decision because of all of these developments, and therefore no decision has been taken on how the treatment of these two bids will be, whether or not they will be eligible, they will qualify or not qualify. And today's meeting has been deferred. Remember, 29th April, if I'm not wrong, is when the 280-day plus, the extended deadline for SRC expires. So either they take the bids and start evaluating them, or, if worst case scenario, if there's a rebid, there's not really much time left for the lenders to go through that whole process. So it is important that, the IRP and the lenders do reach a consensus on the matter soon.
Okay, all right, Ritu, thanks very much. The wait gets longer. That meeting gets pushed back, at least not happening today.
At commodities now, where we have seen a lot of buzz happening, not just in the global markets after the US president's tariff hike expectations in this week, but in the Indian markets as well, there have been more and more import duty hikes, whether it's been in wheat or sugar, pulses, edible oil or palm oil, as we have seen over the weekend. All of that has been impacting the Indian agriculture space as well. Let's talk about sugar then, and we have been looking at a very bearish scenario today, where you have seen the sugar prices decline and the sugar stocks actually have been very much under pressure. So as you can see, Sri Renuka more than 0.5% down, Balrampur Chini has been under pressure as well, and that has been the case with almost all of those sugar companies. Well, the markets are estimating a much higher sugar output this time around. If you look at that, the government sources tell us that 27 to 27.5 million tons is what you could see as sugar. Of course, ISMA is having a meeting on 7th of March. They would come out with the latest numbers then. And ISTA also says that 29 million tons perhaps is what they could be looking at in sense of sugar output this time around. A latest report from ISMA does suggest that we are looking at still some of the mills crushing sugar, and the number could go higher from where we stand on that one, Abhi. Kunal Shah of Nirmal Bang Commodities then joins us to talk more about that and other commodities as well. Kunal, hi. Let's start with sugar first. And while, of course, the government continues to do plenty in case of commodity prices in agri, what is your own sense, especially when it comes to sugar?
Yes, by whatever steps government has taken, forget about the major bull run, but the downside seems to be limited because of these steps. And earlier, looking at the way the Indian crop was at the start, I think most of the general consensus had become the sugar prices will crash sharply. So whatever steps government has taken so far, that has prevented that. And we believe that looking at the overall scenario, the downside looks very limited. We are not going to see a sharp fall in spite of the bumper crop this year.
Kunal, also, what is your sense really coming in for much of these global commodities? Because we haven't started this week on a very positive note, especially on as we are under the shadows of an import tariff coming in from US as soon as this week, perhaps. How do you look at the metal prices in the light of that?
Well, it remains to be seen during this week that whatever the US president has said, that is a rhetoric or that is actual, they are actually meaning that. So if that's just a rhetoric, then you are going to see metal prices may again move up. But if that's not the case, then you are going to see some sentimental sell-off. Remember, 50% of the base metals consumption comes from the China. So in spite of the fact that what happens to the steel, but we are not of the view that the other base metal should be a big victim over here. So for the trading perspective, yes, you can go short considering that the steep import duty hike is coming. But I think that the downside is very limited.
A quick word on the rupee before we let you go, Kunal, and that really has seen a slide. We started the day much on a positive note, even 0.25% higher on the opening trades. But since then, 65.10 has been the low for the day. How do you look at the currency as a maths?
I see further appreciation, and I see rupee sliding down further because we are of the view that the dollar index is not going to move up above 91 in near future, and it is going to slide again back to 88 levels. So the likelihood of rupee testing 64.50 is first, then rupee going up from here. So we are actually bullish on rupee, and the further downside cannot be ruled out.
Well, that really seems to be the consensus right now. Not too many people are bullish on the US dollar index, and especially with the latest trades and moves coming in from the US, that clearly is bearish US dollar. Thank you, Kunal, for joining us and giving us all your sense on the currency and the commodity space. With that, completely out of time on this edition of Closing Bell.